Gold prices this week have risen by 4% and silver more than 6%. What has triggered the rally? It has been the US bond market. Hi, I'm Jateen Trivedi and I'm going to tell you about this week's commodity market update, how the markets have reacted, why they have reacted, and what's going to react further up ahead into the week. Stay tuned till the end of the video to know how exactly the gold market is going to react. So the gold market this week has risen by 4% on back of US bond buying program. Now this bond buying program comes on back of $2 billion, which was the earlier set by the US Treasury Department. Now they have set it to $4 billion. Courtesy, this is the rally in the bond market, which is now shaping up onto the yield curve, and the curve has now come down because of the rising bond market prices. Now this had to cool off. Now this cool off period has supported the gold and silver prices by 4% and 6%. 4500 was a base resistance, which is now going to act as a support as prices have scaled towards 4600 into the international market, and into the Indian prices we are scaling up around 1,60,000. And in silver we have seen a spurt towards $70 mark, and in the Indian markets it is hovering about 2,40,000 and nearing about 2,50,000. Now 2,40,000 will act as a support, and 2,55,000 up ahead will be the next set of resistance. What the markets are going to focus on, it is going to be the bond market participation by the US Treasury, and also the crude oil prices, which have scaled above the $92 mark and hovering between 92 and 94. Now if the crude oil prices scales above 95, this will be another set of setback for gold and silver prices, and profit taking might surge back again into the commodity prices. But inflation concerns are still there, so crude oil has to be a little bit onto the softer side for gold and silver prices to stay updated onto the higher side. Thank you, and stay tuned for further commodity market update with LKP Securities.
Investments in the securities market are subject to market risks. Read all related documents carefully before investing. The securities quoted are only examples and are not recommendations.